Have you ever wondered if a stock is really too expensive or a bargain? There is a magic number that every investor should know. It is called the P/E ratio. Do not be scared by the technical name, because the concept is actually very simple. P/E stands for price to earnings, which is the ratio between price and earnings. Imagine you want to buy a small pizzeria that earns 10,000 euros every single year. If the owner asks you for 100,000 euros to sell it, the price is 10 times the profit. In the stock market, the P/E ratio works in exactly the same way for large companies. The price is how much you pay today to purchase a single share of that company. Earnings represent how much the company actually earns for each share it is issued. By dividing the price by the earnings, you get a number that tells you a story. A low P/E ratio could suggest that the stock is undervalued relative to its actual earnings. On the contrary, a very high P/E indicates that investors expect explosive growth. But be careful. A low number does not always mean that the deal is guaranteed or safe. Sometimes a low P/E ratio simply reflects structural problems or a sector in sharp decline. Similarly, a high P/E ratio could indicate a speculative bubble ready to burst soon. The secret is to always compare the P/E with that of other companies in the same sector. Never look at this number in isolation, because context is fundamental for deciding. Think of the P/E ratio as a thermometer that measures the temperature of a specific investment. It helps you understand if the market is too optimistic or perhaps overly pessimistic today. Investing requires patience, constant study, and the ability to read data with clarity. The P/E ratio is just one of many useful tools in your toolbox. Use it to filter your choices, but never base your entire strategy on one piece of data. Knowledge is your best defense against emotional decisions dictated by panic. Now that you know this indicator, you can analyze your favorite stocks with different eyes. Search for the P/E of the companies you follow and try to compare the results obtained. You will immediately notice interesting differences between technology, banking, or consumer goods sectors. Technology companies often have high P/E ratios due to high expectations for future growth. Established companies, on the other hand, tend to have more stable and predictable P/E ratios in the long term. Remember that the stock market always rewards those who know how to look beyond the face value. Understanding the real value behind every single action is the first step towards success. Do not be in a hurry to invest all your capital without having done the necessary research. Prudence is the virtue of those who want to build solid wealth over time. Every great investor started by learning the basics, just like you are doing now. Keep studying, keep asking yourself questions, and never stop digging deeper into the data. Personal finance is a fascinating journey that requires commitment and an open mind. If this video helped you clear up a doubt, don't forget to save it right away. You will be able to review it when you are ready to analyze your next investment in total autonomy. Share it with a friend who is starting to take their first steps into the financial world. Together, it is always easier to learn complex concepts and transform them into very simple decisions. The world of investments awaits you, armed with new tools and greater awareness. Every number has a story to tell. It is up to you to learn how to read it correctly. The P/E ratio is just the beginning of a long series of discoveries in the market. Stay tuned for more practical tips on how to best manage your personal savings. Your financial education is the most profitable investment you can make in your life. Never underestimate the importance of understanding what you are buying before committing your money. The market is full of opportunities for those who know how to wait for the right moment with patience. Analyze, compare, and decide. This is the virtuous cycle of every successful investor. Do not let yourself be influenced by background noise or sensationalist news from the daily media. Focus on the fundamentals, such as the P/E ratio, to stay on course toward your goals. Discipline always beats instinct when it comes to managing one's personal wealth. Be consistent in your learning journey, and you will see the results come over time. Thank you for taking the time to improve your understanding of the world of stocks. Every minute spent studying is a step forward towards your future financial freedom. Continue following our content so you do not miss the next finance lessons. Your curiosity is the engine that will take you far on this path of growth. See you in the next video, where we will explore other fundamental indicators for your investments. Remember, knowledge is power, especially when it comes to managing your savings. Save this video so you do not lose the explanation of the P/E ratio when you need it. Good investment to all those who choose to study before acting on the market. Until next time, and keep investing in your financial knowledge every single day.